Boom, more Tesla Inc. shares were recently sold by Cathie Wood's Ark Investment Management as the company's stock dropped due to investor apprehension over CEO Elon Musk's $44 billion takeover of Twitter Inc. The well-known money management organization sold 10,035 shares, worth $8.08 million in the Musk-led corporation. Given that Cathie Wood is among Tesla's most well-known supporters, investors were taken aback by the company's stock's recent 27 decline after it had already dropped 20 in the previous month. But Wood just increased the target price for her company. Ark Investment Management, led by Cathie Wood, predicted that by 2026, shares of Tesla Incorporated will double to $4,600. On April 14th, Ark introduced an upgraded model that costs over 4 times what it does now. Why, therefore, would she give up her ownership of the top electric car company? To find out, keep watching. The name keeps cropping up when discussing the remarkable price history of Tesla stock and the influences that have driven buying and selling over the previous 5 years. Cathie Wood. Following the positive first quarter earnings report from the electric vehicle manufacturer, Cathie Wood's Ark Invest sold more than $100 million worth of Tesla shares. The flagship Ark Innovation ETF Ark sold Tesla equity for $70 million, or negative 0.50. 3 of its 6 frequently traded exchange funds, Ark Innovation FA Ark Autonomous Technology and Robotics ETF RK, and Ark Next Generation Internet ETF Ark Wong to St. Petersburg, Florida-based Ark Invest, which holds Tesla shares. The 3 ETFs held 1.31 million Tesla shares, valued at $1.15 billion, prior to Wood selling off 10% of her ownership earlier this week when Musk declined to disclose the source of funding for his purchase of Twitter. Traders jumped on Tesla stock. Since the maker of the electric vehicles is not a party to the contract, Ark has been selling Tesla for a profit each time the price goes above $1,000. Wood ended Ark's month-long profit booking binge earlier this month when he bought Tesla stock in January, following the company's Alend trading day decline earlier this month. From a March projection of $3,000 by 2025, Ark Invest increased its price goal for Tesla to $4,600 by 2026. Wood followed suit, selling more than $200 million in shares to fund a splurge on previously underperforming firms, including Roblox, Zoom, and Coinbase, which have all seen their prices fall by up to 52,335 shares of Ark's largest holding, Tesla, were sold by 2 of Ark's funds, including its flagship Ark Innovation ETF, for a total value of almost $57.05 million. Afterwards, the 3 funds sold for around $147.05 million, as per the daily transaction data of the company. These were the first Tesla sales for Ark since mid-January, and they occurred after the company's stock had surged more than 40 over the previous 2 weeks as the market as a whole rebounded from a sell-off driven by geopolitics. The stock had dropped over 30% for the year when the New York City investment firm purchased nearly 60,000 shares in mid-February. Although Tesla was Ark's best-selling stock, the company also sold 6 other stocks, including tech giant Splunk and Vertex Pharmaceuticals, for around $21 million. As previously mentioned, Wood replaced them with a sizable stake in Coinbase, another prominent asset that she acquired for over $100 during the same time period. She also acquired the Gen Z gaming platform Roblox, the streaming behemoth Roku, and the once famous Zoom. At that time, Tesla's shares were selling at about $11.04, down about 12 from their peak in November. Coinbase, Roblox, and Roku have seen year-over-year declines of 19, 48, and 42, respectively. Why, therefore, is Ark selling Tesla shares once more? Ark's trading strategy involves hedging against stock's volatility by purchasing at low levels and selling when Wood senses an impending decline in value. She went on to explain, "We naturally take profits when we feel like analysts are hyperventilating about a stock, including Tesla, because we know we'll get another opportunity connected with controversy to purchase the stock lower. Tesla has a $1.02 billion holding, or roughly 9 of Ark's flagship fund as of October. This is a decrease from their October $2.03 billion stake, or 11 of the fund. According to a few recent rumors, the leaders of Ark Invest decided to sell off some Tesla stock, but that kind of language is misleading. More in-depth reporting on the incident indicates that it's a little off target. Granted, the company did sell a little portion of its Tesla stock, just a few fractions of a percent, but the funds were still significantly invested in Tesla, going from 11% to 10% in fund weighting, for instance, simply indicates that you're cutting a little bit. It doesn't imply that you're leaving a specific market equity. It doesn't necessarily follow that the party selling the shares is worried about its performance in the future for whatever reason. The money from the sale will probably be used by Cathie and her coworkers to finance the acquisition of new businesses with more potential for growth. Wall Street is growing more skeptical of Wood's approach, which Ark says emphasizes disruptive innovation. Traders who wagered against the flagship fund of Ark made over $1 billion in January, exceeding their total return of $941 for the entire year. Wood said, shorting innovation in America is insane at the time. One of her detractors with regard to the shorts is Scion Asset Management, a hedge fund run by investor Michael Burry, who made headlines in 2007 for his renowned housing market catastrophe prediction. Scion Asset Management revealed towards the end of the previous year that it owned bearish put options on $30 billion worth of Ark shares, in part because of her predictions regarding Tesla prior to the company's significant stock price spike in 2020, 5-to-1 stock split, and subsequent strength and enduring power as Elon Musk's creation. Wood initially gained notoriety as an incredibly prescient market analyst, but Wood became well known among investors in 2014 when he founded Ark Invest, supposedly calling these groundbreaking funds after the biblical Ark of the Covenant. Wood's early remarks on Tesla make it clear that she loves the company in part because of the ways in which the two business models are comparable and because of the complementary ideas that propelled the growth of both Ark Invest and Tesla. Both are predicated on the notion that quick technology development can result in financial benefit. Instead of concentrating on a specific technology, they all have different perspectives on this idea and a broad focus, but there's more to early Tesla investment than meets the eye. The Harding Tesla. Wood said that it was trading below its fundamentals, and for that reason, she saw it as a value investment. This indicates that Wood saw a lot of room for growth in Tesla stock after considering its revenue, profitability, and other factors. Indeed, it did. Over the course of the last 18 months, Wood's early belief that Tesla had a lot to offer the market has played a significant role in both Ark Invest's initial large bet on Tesla and her encouragement to Elon Musk to keep the firm open to the public as he contemplated a repurchase. Cathie Wood has predicted multiple future prices for Tesla's stock. Wood forecast that the price of Tesla's stock would reach $4,000 per share by 2023, when the market value was significantly lower than it currently is. Recall that this occurred prior to the 5-to-1 split, meaning that the post-split equivalent share price was $800, reaching its peak 2 years ahead of her forecast. The key finding is that Cathie Wood remains upbeat about Tesla's long-term prospects, as seen by the transaction analysis and interviews. First and foremost, that proportionate sale represented only 0.6% of Ark's overall assets. A small amount overall, therefore, it's not necessarily a terrible thing for Tesla that Cathie Wood and her staff exchanged a tiny portion of Tesla shares for another stock, for example. It just means that diversification can be rebalanced to create greater opportunities elsewhere. Ark's ownership in Tesla saw an approximately 800 increase in the company's stock. Most people, however, don't think that this rate of increase will keep up year after year. It makes more sense to anticipate that Tesla will develop in a more conventional manner as its market share increases. Ultimately, it's clear from interviews that Wood is still upbeat about Tesla. Following a recent Tesla stock decline, Wood reportedly said, according to Bloomberg, corrections may be helpful. They keep us all humble. Strongest bull markets I've ever seen are surrounded by walls of anxiety. That demonstrates commitment. We anticipate that ARK funds will continue to be bullish on Tesla as the market season goes on, just as they have always been, especially given how frequently significant updates on the company are announced. Could you sell your shares of Tesla? Please leave a comment below.